Welcome back, everyone. Now we have a panel discussion on transforming banking and payments for government organizations in the era of digital money. I would like to invite Amol Dethe, editor ETBFSI, to moderate the discussion. Over to you, Amol.
Hello, welcome, ladies and gentlemen, for this session. Let me tell you honestly that this is going to be a power packed session because I have with me the heads of the top banks and the financial institutions, and also the policymakers here with me in this session. And this session will be in two parts. The first session will be on reimagining technology for financial services, and the second session will be about transforming banking and payments for government organization in the era of digital money. So the first session specifically about reimagining technology and financial services will be having Mr. Sanjeev Kaushik, the Additional Secretary, Department of Financial Service, Ministry of Finance, Government of India, delivering his keynote on this topic, followed by a session where I will have Mr. Saurabh Garg, Chief Executive Officer, Unique Identification Authority of India, Government of India, Mr. Dinesh Kumar Khara, the Chairman, State Bank of India, Mr. Prasad, Managing Director and Chief Executive Officer, Yuko Bank, Dr. Dinesh Kumar Tyagi, Managing Director, CSC E-Governance Services India Limited. Then Arun Sharma, Director, Direct Benefit Transfer, Mission, Cabinet Secretary, Government of India. And Pawan Kumar Singh, Deputy Director General, Financial Services and Post Bank of India, Department of Posts, Government of India. So, ladies and gentlemen, stay tuned for a power back session. My name is Amol Dethe, and I'm heading Economic Times, BFSI.com, a vertical by the Economic Times. So, stay tuned to this session, and I will ask Mr. Sanjeev Kaushik, Additional Secretary, Ministry of Finance, Government of India, to talk about uh, the reimagining technology for financial services. Mr. Kaushik.
Thank you, Amol. Thanks a lot for inviting me to this session. And I must say it's an absolute pleasure to be with such a distinguished panel. And I see my esteemed colleagues are on the panel as well. The topic that you have assigned to me today is reimagining technology for financial services. Now, the moment we start reimagining, the pace of change is so fast that, by the time you reimagine, something new has overtaken you. So I think we have to be in a constant state of flux, in a constant state of transformation, so that we are always abreast with the pace of technological change. I think that is the key theme with which I'd like to weave some of the ideas that I present before you today. Of course, you would have heard in the most recent budget announcements, the budget spoke about CBDC. There has been a lot of discussion around digital currency at recent stage, and a lot of discussions on regulation, a lot of discussions around how exactly things will work are still in the pipeline. But overall, I think governance has undergone a huge transformation over the years because of driven by technological change. If I look back at the time when I joined service in the IAS and today, citizen service delivery itself has undergone a rapid, huge transformation. Today, we have the citizen service centers. Almost anything can be done on the click of a button, whether it's G2C services or otherwise. And obviously, the benefits have been huge in terms of savings, in terms of the ease or speed of access to various services on financial services or government services. And also, of course, we sitting on this side of government have also felt the benefits in terms of preventing leakage and plugging loopholes, where we earlier used to see a lot of money being wasted through the DBTs. Today, we have direct benefits to beneficiaries' bank accounts. So it's been a journey of transformation which has had multiple benefits, and realizing the impact of some of these changes over the years, I think the adoption has also increased, as has the adoption of technology and the revolution in the technological platform. If you look at banking itself, financial services, I mean, the financial services phrase covers a whole gamut of services, whether it is banking per se, as we understand it, retail banking, but inside banking or procedural change, there's a lot of change in the platform on which banks function. And then, of course, there are various other financial services, for example, insurance, brokerage, and so on. In terms of some of the banking related changes that we have seen, and the Department of Financial Services has been at the forefront of driving change through the ease reforms. Some of you would have heard that we've been implementing the enhanced access and service excellence in banks, through which we've actually implemented smart banking in the public sector banks, 24/7 internet or mobile-based banking. And from that journey, we have now reached a point where public sector banks are today talking about super apps. Recently, Bank of Baroda launched Bob World, and most of the banks have their own apps. But today, we are talking about a cloud-based platform architecture, which is collaborative, and you're talking about super apps. So not only has governance been transformed through technology, but the way we do banking and the way banking conducts itself. Mr. Dinesh, Khara, and my colleagues from UCO Bank and some of the other financial services providers will shortly speak. And I'm sure they'll talk to you about how banks themselves have undertaken this journey, whether it was post the amalgamation of different banks, or it was through internal systemic changes, for example, the early warning alerts, or through the APIs that they have put in place. Banking itself has been reimagined and reinvented in many ways. Now the huge spurt, or the explosion, spurt is an understatement, explosion in digital transactions. Digital transactions have increased 6.6 times over a span of the last 4 years. And today we are touching 7,100 crore transactions in the FY 2021. UPI transactions within the overall scheme has actually increased manifold, 24 times over a span of 3 years, to touch 2,223 crores in financial year 2021. Now, how did some of these numbers come by, and what drove this growth? We have to give total credit to the vision that was unveiled for us in 2014. My senior colleague, Dr. Saurabh Garg, is here, and he will bear this out when he speaks. But our Honorable Prime Minister launched the Prime Minister's Jan Dhan Yojana program in 2014. This was followed by the launch of Digital India campaign. And then, when we undertook Aadhaar seeding of Jan Dhan accounts, we put together the entire JAM Trinity, the platform of Jan Dhan, Aadhaar, and mobile, driving the current growth in digital transactions. It's been a journey from 2014 onwards, which has resulted in the kind of volumes and in the kind of growth that we see today. This is not by no means the end of it. I think the journey is only half begun. I think the kind of things that we are driving forward in the years to come would include, for example, NPCI going global. You know that the RuPay card has been very, very useful and instrumental in helping people access their bank accounts, whether it is in remote rural areas or through lockdown days when people needed to access their cash. But now we are talking in terms of taking UPI international. We are talking in terms of taking the RuPay card international to locations like Singapore and Korea. And therefore, RuPay or NPCI, or if I may use the word, India is at the forefront of financial inclusion and at the forefront of technological change as far as financial services are concerned. Now, I think a look at some of the ways in which government organizations have rapidly changed using the way that they have been harnessing technology to provide services to the citizens, to beneficiaries. Let's take a few examples. If you see the payment of direct benefits transfers, a humongous number of government schemes are seeing direct flows to beneficiaries' accounts. For example, PM Kisan, which sees the transfer of the installment of PM Kisan Nidhi directly into the farmers' accounts. That has been a tremendous change, and you saw the results of that during the entire lockdown period. Fertilizer subsidy, to name just one, has been flowing directly to the accounts of beneficiaries. And then finally, we also have the various social security schemes, whether it is the micro insurance schemes of Jeevan Jyoti Bima Yojana or the Jeevan Suraksha Bima Yojana, or the pension schemes like Atal Pension Yojana, for example. During the pandemic, we faced with so many constraints, we were able to increase our enrollments, we were able to accept digitally claims, and then the claims were processed and amounts reimbursed to the beneficiaries' accounts. All this was made possible only through the use of technology. And going forward, we are trying to make this a seamless digital process which would flow completely online. This would not only make it hassle-free and ease the process of filing claims, etc., would also ensure the turnaround time in some of these schemes is also reduced in a very major way. If you see the example of Pradhan Mantri Garib Kalyan Yojana, in which more than 20.5 crore women account holders of Jan Dhan Yojana received about 31,000 crore rupees directly into their bank accounts. This was entirely made possible through the by NPCI working with the banks led by SBI, and the monies hit directly into the accounts of the poor and needy at a time when they needed the money the most. So all this has been possible only because of the technology and the platforms that have been put together since 2014. Going on to the lending platforms, because, you know, in terms of providing employment and income generation, some of the small lending schemes are also extremely important. We all know that today Mudra loans are being sanctioned online through the PSP loans in 59 minutes portals. You have a seamless acceptance of applications, sanctions, and disbursements entirely online. So a large number of Mudra loans are now beginning to flow through the online platform. We had a huge success when we implemented the PM Swanidhi scheme for small ticket loans to street vendors, in which loans of 10,000 rupees were directly not only accepted online, but also disbursed through the digital platform into the accounts of street vendors who had suffered in a very major way during the COVID crisis. This was entirely possible only because we had the technology in place. Today, as we take our discussions through to the next stage, along with Niti Aayog and along with various other agencies of government, we are talking in terms of cash flow based lending. So what does that entail? So the account holders' accounts are traced for history of payments, for their credit rating. All that information is available in terms of what are the DBTs that they receive, what are the payments that they receive, what are the cash inflows and outflows. And based on all this aggregated information, we would be able to offer, small ticket loans, Mudra loans, for example. The pilot for this project has recently been launched in Varanasi district in Sevapuri block, and it is called Project Kashi, which Niti Aayog and DFS have together launched. And it has also won mention from the Honorable Prime Minister's office. Now, as citizens, we all have experienced how technology has made life much simpler, much easier for us, whether it is income tax refunds and challans online, or receiving refunds from the income tax department, or indeed through various government schemes where interest subventions, subsidies need to be credited into beneficiaries' accounts. All that it requires is a click of a button, and lo and behold, you are able to access the services, you are able to make the payment or receive whatever is due to you into your account. Let me also talk a little bit about the National Common Portal that DFS is currently working on. This is something still in the pipeline, but the idea is that almost 15 to 16 government schemes which are credit linked would be brought onto a common national portal. And ultimately, whether it is a farmer or it is a small ticket borrower or an MSME or a woman entrepreneur, they would all be able to access these credit link schemes, apply for them online. There would be a host of providers, not just one public sector bank or private bank. It would be all the banks in the ecosystem. And through them, I think the citizen would be able to avail services like, whether it is availing a Mudra loan or applying for a social security scheme, one of the Jan Suraksha schemes, or Atal Pension Yojana, or the Stand Up India program. And all this would then enable India to continue its lead. You know that we are at the forefront of financial inclusion. Now, through these methods, through these methodologies, and through the technology, India is aiming to leapfrog from financial inclusion to the next stage, which is financial empowerment, which is Jan Dhan 2.0, really, moving from simply financial access and financial infrastructure to financial savings, to the financialization of savings, and also to enable people to save for various life goals or various milestones. Recently, Honorable Finance Minister has spoken about the account aggregators. And sorry, I'm jumping from one example to another, but these are all things which illustrate how important technology is and how swiftly technology is taking financial services forward. So Madam has been speaking about account aggregators, which is essentially a fintech-led initiative where a number of service providers would be able to provide digitally a number of financial products. For example, you could open your accounts, and you know that we already have video KYC online. If you wanted to open recurring deposits or fixed deposits, it could be done on the same app. If you wanted to purchase, have gold-linked saving schemes, for example, or access your Demat account, or invest in various other kind of products, insurance products or financial markets products, this would all be available through the fintech providers. And this really is the concept of account aggregators. But that is something that I would leave for the experts to speak more about. Now, in all of this, these various exciting developments which are happening at a breakneck pace, the role of two or three things becomes extremely important. First and foremost, the importance of literacy, financial literacy and digital literacy. Digital literacy, because we don't want to have gaps between those who have access to technology or who are not familiar with digital methods or digital platforms. So digital literacy becomes very important. And again, financial literacy, as you interact and transact online, the need to be able to access products, providers, and to be able to distinguish as to what matches your needs the most. So along with the Reserve Bank of India, we are launching a number of financial literacy initiatives across the country, which will ensure that everyone has this information and savviness on accessing some of these products and services they're concerned. Now, the second important caveat is that as we make this rapid progress, we have to be very mindful of cybersecurity. And there are several instances in the recent past when we've had instances of breaches of cybersecurity. So therefore, requisite firewalls, the requisite preventive mechanisms have to be put in place. But also, this has to be accompanied by a redressal mechanism. RBI has a redressal mechanism in place, but which involves ombudsman and also call centers and helplines. But the customers themselves have to be savvy enough and have to be educated and aware about financial crimes, because as more and more financial information gets shared across providers and gets aggregated, I think we have to be very careful about cybersecurity aspects. And finally, as we talk about things like digital currency, digital money, you have to be very mindful that the regulation in some of these new areas is still in a very nascent stage. I think there is a lot of way to cover before we are able to arrive at some kind of convergence on the regulation and how cross-border flows, for example, or how digital currencies would evolve and how they would be governed. So the jury is still out on that one. And therefore, these are some of the things that we have to be very alert and mindful of as we discuss a topic as buoyant and as evolving as reimagining technology for financial services. So, Amol, with those words, I hope I've been able to capture some of the instances and some of the changes that we are seeing sitting within government as far as financial services is concerned. I look forward to hearing my esteemed panelist colleagues, and thank you very much for giving me this opportunity. Over to you, Amol. Thank you.
Thank you, Mr. Kaushik, for adding and giving us highlights about not just about digital payment, which is the revolution that is happening in India, but what may happen. I think you spoke about the financial inclusion and the financial empowerment and the cash flow lending. Uh, you spoke about the platform cloud. In fact, globally now, the banks have started hiring different designations like chief sustainability officer, chief cloud officer, chief platform officer, chief fintech officer. And I'm sure soon the banks and the financial institutions are also going to have such people, because the digital payment space has been really robust in India. And in fact, it has put India on a global map in a far more significant manner. So thank you, Kaushik sir, for adding all those remarks here. And let me tell you that I have my panel ready here. All the speakers have joined. And let me begin my first question with none other than the CEO of UIDI, Dr. Garg. So, Dr. Garg, my first question to you is, how digital payments, including Aadhaar-enabled payment and unified payment interface, which is UPI, and fintech innovations are giving a big boost to the digital economy in India?
Thank you, and a pleasure to be here on this National Governance Virtual Summit 2022. As my colleague mentioned about from the Department of Financial Services about all the activities that are already being done, it makes my job easier to that extent in mentioning on what is on these issues. I've been asked to focus a bit on the fintech innovations, giving a boost to the digital economy, and what else UIDI is doing in this sector for this. Essentially, the fintech innovations that have really revolutionized the space over the past 4 to 5 years have been, for example, the Aadhaar payment bridge, which enables government to directly transfer funds to accounts of individuals. And we have seen that we have about 10 crore such credits happening every month for the past few years. And cumulatively, we have reached that figure of nearly 880 crore such transactions. The second part of this is the Aadhaar-enabled payment systems, which enable individuals to withdraw the cash from the bank accounts. And we are seeing about 50 crore such transactions happening every month. AEPS is on an assisted mode, and I'm sure we'll find ways to move towards an unassisted mode also, which will definitely increase the number of transactions significantly. UPI, of course, Sanjeev Kaushik mentioned about it, and I have other banking friends who would be talking about it. Where I think a lot more of the fintech revolution or the changes will come is first on the digital lending part, which will make it where credit worthiness can be determined by unconventional means, maybe by looking at the utility bill history, looking at the digital footprints of the assets, etc. So a transaction-based kind of a system. And also maybe unconventional collaterals, so that we don't need a physical collateral, whether warehouse receipts can be used, invoice discounting could be used, and this will enable much more cash flow based kind of financing, which is possible. And similarly, a number of such innovations are being looked at in the digital insurance area and other such areas. There are 3 specific activities which are going on by different wings of the government or agencies. One is the public credit registry by the RBI, which will make lending perhaps so much simpler. The second is the Open Credit Enablement Framework being built on top of the India stack. And of course, as Sanjeev Kaushik mentioned, the account aggregator framework, the Sehmati, which will also help. In all these, Aadhaar is like a digital infrastructure which provides the basis for a KYC, which is essential in a financial sector. Without a seamless KYC, no financial player would like to interact with any individual. And it is there where I think the Aadhaar is playing its role of being the digital public infrastructure, the digital rails of the country, so to say. And our attempt is to make the eKYC so much more seamless going forward. We already have the biometric fingerprint and iris. We've introduced face authentication also, so that it becomes much more touchless as we go ahead. And also to check any frauds, we have introduced liveness detection in the modalities for fingerprint and face, and also increase the security of the devices, both in terms of the hardware and the software, so that the security certification of the last mile authentication devices is so much more better. And that is where we are moving towards. We are looking at how we can use the mobile phone as a universal authenticator. That will take some more time before we reach there. All this has enabled that during COVID, the kind of payments that happened, people continued to be able to access the banks and the financial system. And we saw a nearly 100% increase in the transactions that happened from the DBT system. And that is what enabled a lot of transfers to take place to individual cash transfers, which the government did. So going forward, we look forward to working with the different partners, with the different banking partners, as well as other financial ecosystem partners, whether it's the NBFCs or the investment, pension and insurance companies, to ensure that digital ecosystem is strengthened and it becomes so much more seamless. Thank you. Thank you.
Thank you so much, sir, Dr. Garg, for highlighting valuable points. Khara, sir, I will come to you. And I still remember when you took over from, Mr. Kumar at SBI, you specifically spoke about analytics, digital banking, digital payments that you would like to incorporate at SBI. And we have seen a major change at SBI. So my question to you immediately, sir, is, what kinds of value the digital payment has created for SBI? And how is the State Bank of India heading towards contactless payments for government organizations going ahead?
Well, I think as far as the payment systems are concerned, that of course has proved to be the lifeline of the Indian economy, particularly during the period of the pandemic. I think that goes without saying, and the kind of benefits which you have seen across during the period of pandemic and how it could really be a source of comfort for very large population in the country, and when they could get their payment in time. So that I think is a huge advantage which the payment system has offered. Of course, it all goes to the DBT, and also the accounts which we opened under the Jandan accounts, which we opened very large number of accounts, more than 13-14 crore accounts which we have. That actually enabled us to really ensure that all this money flows seamlessly into the accounts. So I think that way it has helped in terms of avoiding the leakages in the system. So that is a very major advantage for the country as a whole. And for us, it is also creating a situation where it's a frictionless banking for a very large population of the country. So having said that, it may not be out of place to mention that our YONO Cash, which we introduced some time back, which does not involve using of card even at the ATM, it is only involving using few of the codes to be punched into the ATM machine. That has helped us in ensuring that the cards are not put to any kind of a misuse. So I think that is something which has gone a long way in terms of proving its utility. If I may indicate that, in the year 2021, we have almost dispensed about 4,13,000 crore with the help of DBT and DBTL. So this is something which you can very well imagine that what is the kind of a magnitude which it has, and it is actually about almost about 140 lakh, 180 lakh transactions which happened during the year 2021. So I would say that it's a major game changer. The kind of things which have happened through UPI is again further, I think, beyond anybody's imagination. The kind of ecosystem which has got created and the way UPI is being used for small value transactions, for paying the small value transactions, it's a major game changer. I think when it comes to cashless economy, these are the major steps which have been taken in the country, and I'm sure going forward it will further get strengthened only. So I think in terms of value, when it comes to the cost saving in terms of handling these transactions, it is something which is in terms of value, I would say that we have not really worked out any kind of a amount. But more important is a frictionless service to the customer, and also the confidence and the faith of the customers in the digital, which has gone up multiple times. I would just indicate that, for a bank like us, which has got more than 23,000 branches, almost 23,000 branches, where perhaps people will think that physical is the only option, but it is digital which is an option. 95% of the transactions are happening outside the branch, and 77% of the transactions are in the digital form. So that itself, you can imagine, almost about 11 to 12,000 transactions are happening per second in this bank. So this only gives the magnitude of the transactions which are happening through the digital means. Now, of course, the new options which are e-freight, and also when it comes to fast track, etc., they are being much in use, and I'm sure it is a value creator for the customers and as well as for the utilities, because they can have their recovery or the collection without incurring any cost. So that's what my sense is when it comes to digital and its relevance and importance for the economy.
That's truly meaningful, Khara sir, and I echo you. I think the 11,000 plus number per second is really important, and far more, it showcases the strength of India in the digital payment space. Thank you for adding that note. Let me move my focus to Mr. Tyagi. Mr. Tyagi, you are working specifically for the social welfare or public utility services under you, and I would like you to tell us how can you actually strengthen the digital payments for these segments like public utility services, social welfare schemes, because on the typical customer side, we have seen a great rally in the digital payments, and Khara sir also, gave examples of those things. But on this side, social welfare, public utility, how can we strengthen the digital payments over there?
Thank you so much for inviting me and sharing some of these which you pointed out. See, the digital economy supported by digital financial transaction is really a game changer for India. It is also redefining the way the citizen access services. If you recollect, even after so many years of independence, more than 70 years of independence, we had only about 40,000 rural branches, and we had 6 lakhs villages. In the traditional system of delivering banking services to customers close to the place of residence, it will probably not happen. I think thanks to the Government of India initiative of taking digital initiatives in a manner that it becomes so conducive and easy. And I think the Aadhaar and mobile are the real support system. Aadhaar has really redefined the way things can be easily transferred, translated, and made accessible and assimilated in the community. Aadhaar is really a phenomenal change for India, because the identity itself was a big issue, and that was one of the constants of trying helping people in this. Jan Dhan account opening was also a great game changer by the Government of India's initiative, where people who were not having an account with a defined time frame, they were trying supported by. So what we are trying to do is, we are now creating a financially inclusive society. Means everyone, whether irrespective of where he lives, whether in villages, in more than 600,000 villages, is able to access financial services, which are one, of course, is banking services. Then you also have insurance, because they also become digitally. The transformation and digitization in India is probably progressing the fastest in the world. It is not happening in any part of the world. The pace of digitalization is very, very fast. So with the changes taking place in these sectors, As I said, the pension scheme, which was mentioned, and of course, the schemes on insurance, the pension which has happened in insurance. Now you can actually take out the insurance policy without a piece of paper. You don't have to really take a piece of paper digitally. Earlier, the policy, I remember, used to come in 3 months' time. You will first fill up documents and you can get a policy. So look at the simplification in the life of people by all these initiatives which are taking place. And the simplification is now being supported in empowering communities, in enabling and including a digitally and financially inclusive society. Government of India's stance is very clear. I think what they're envisaging is make life simple for everybody. Digital tools and technology are only enablers, they only means to achieve the larger objective of creating a society which is able to access every service very close to the place they value. And in that effort, we as a common service center, with the assisted form of delivery, try and play a significant role because still in rural India, people may not be able to access themselves. They need some support. So this person who lives in the same village has the basic computing infrastructure and has the ability to mobilize and build confidence in the community, deliver services to them. That's what is happening. So today we almost do all the banking, insurance, pension schemes and deliver to the people. In addition to the financial services, we also are looking at the other social services which are required to be given to him, either promoted by the government or which they are supported by two other service providers. All that which is happening is really transformative in that sense. See, if you go to the village today, you find it. We have met a lot of people who have not even gone to a bank for the last 2 years. That is phenomenal. That has not happened earlier. So not because they're able to access. There are people who are sick. There are people who are physically unable to go to them. Somebody has to go and carry them. Even if the branches are computerized and all the systems are done, you still need somebody to support them. That support system is provided through common service. Common service center is only helping the banking sector to fulfill its large obligation and provide services close to the place. We do a large number of Aadhaar enabled. We are thankful to the UIDAI and the NPCI since we do an Aadhaar enabled payment system and a fairly large number of transactions take place through APS. And I find the APS is the safest as compared to any other means which is in the ecosystem for delivering basic banking services. We also now getting leads generated for loan. There are now fintechs coming in giving loans based on all this which are being discussed on cash flow basis. So transformation in the financial space is significant, taking a very fast pace. Many of the fintech companies which you come across are phenomenal. They grow phenomenally in solution. Probably if we were before, we would have never thought they will grow so much. The amount of resources they raised and the amount of capital they generated is significant. So the growth in the fintech is still to go a long way. There will still a lot of innovations are happening. A lot of innovations will happen, and the government support system actually promoting innovation. They are promoting innovation. All the initial inhibitions within the existing traditional system to adopt technology, assimilate, and try and promote support to new fintech innovative companies has now disappeared. So then everybody's focus is only single one: how to make life simple for the person who lives in a remote location, and that's being achieved.
Thank you so much, Dr. Tyagi, for those remarks, and I think that was truly meaningful. We can see most of the banks have now more than 20, at least partnerships with the fintechs. They opened their APIs and they're leveraging the fintech and the payment space far more aggressively. Prasad sir, I would like you to tell us now, how are you leveraging the whole digital payment space and trying to create a business value out of it?
Yeah, if you look at the digital space, actually the fintechs are playing a very important role. When the fintechs had actually come in, maybe a few years back, many people were predicting the end of banks. They were saying that fintechs will perform the role of the banks and banks will not have a role once fintechs mature. But I think that has totally undergone a change now. I think almost all the banks have realized that they have to work with fintechs. So the relationship between the fintechs and banks has become a mutually beneficial one. So, I mean, it makes sense for both because fintechs do not have the customer base, nor do they have the trust, but they have the technology, whereas the banks have the customer base, which they can offer to the fintechs. So when it comes to the UCO Bank, What we have done is we have leveraged on the services provided by the fintechs. And we have been able to integrate the services provided by the fintechs, not only into the mobile banking platform, but we have also integrated them into our LOS and loan management software. So this has really helped in improving the quality of loan appraisal, as well as in improving the quality of services that we provide to our customers. Of course, see, when it comes to banks, when you look at different banks, most of the banks are offering more or less similar services. So what distinguishes one bank from the other when it comes to to the digital space? One major distinguishing factor, I would believe, is the ease of use. So, for instance, we have a mobile banking app, which is rated very highly in the App Store. We have a rating of 4.5%. And I believe this is one of the highest ratings that a mobile app has received in the App Store. So that is as far as the ease of use is concerned. The other aspect about which the customer is concerned is about the security part. So the customer has to feel absolutely secure when he is using the digital means. And the third part, I think, which is very important for a customer to use digital means is the speed of resolution. See, when the customers use digital means, a customer faces several issues, and these issues have to be resolved. So the faster that you are able to resolve these issues, the more the trust that the customer develops in using digital means, especially the digital offerings used by you, which are offered by you. So I think that is very important. Of course, when it comes to UCO Bank, since you have asked me, we are in fact on par with any other public or the private sector bank in India, because we are into WhatsApp banking, we are into video KYC. In fact, we've also recently tested the UPI offline payment, which was actually, the Governor RBI spoke about it. So we have done a fair bit of testing, and again, this is this is an application which has come out of the regulatory sandbox, which has been launched by the RBI. So, and then we have actually, to give you an example, for instance, on our mobile banking app, we have utilized the services of a fintech for providing wealth management services. That is, it permits a customer to put money in mutual funds, to open a demat account, to do insurance. And this happens on a revenue sharing model with the fintech. So we get 60% of the revenue and they get 40% of the revenue. So it's a win-win situation for both the fintech as well as the bank. So I think this is the way, as I look at it, I think this is the way going forward. Because I see that there is a lot of development on the fintech side. There is a lot of money which is coming into these fintechs. And in the last 1.5 months, or now roughly 2 months, if you see, there have been 10 unicorns in our country, and some of them are fintechs. So there's no dearth of capital which comes into these fintechs. And I think these fintechs are also looking out to the banks to provide them the platform. And I think together the banks and fintechs coming together would not only be very important to the customer, but it would go a long way in promoting financial inclusion, which is especially, I think, the need of the hour in a big country like India.
Absolutely, sir. Very, very valid points. And thank you so much for actually sharing the exact numbers of the revenue that you have with the fintechs, which generally not many people are sharing. But I think good parts, and no doubt and no question about the growth of the fintechs. In fact, most of the fintechs now are valued more than the traditional companies and few small banks as well. We have seen that with one Paytm company got listed recently. Now let me shift my focus to DBT, which was always a major challenge earlier. But now it looks like that problem is getting resolved with the digital payments. And I have here with me Mr. Sharma from DBT. He's a cabinet secretary, Government of India. So, Sharma sir, my question to you is, digital payments have obviously shaped up the DBT. So, how successful has this central government been in bringing more subsidies under DBT? And more importantly, sir, has state governments also embraced DBT for distributing, subsidies and making the citizens and the government digitally empowered?
Thank you, Amol. That remains a key question for us in the central government. And given the federal nature of our economy, both state and central governments have to come together to make these transactions happen. And for that, you need a little bit of background in public financial management, wherein there are schemes which come under something that is called the centrally sponsored route and the central share, which is transferred to the state governments, and then they have to disperse it. So in all, we have 310 plus schemes in the central government, which are now on DBT. We went through a rationalization of these schemes a couple of years back. At one point in time, we had about 500 schemes which were under DBT. And then we realized that these schemes are, a lot of smaller schemes are there, which take as much time and effort to monitor, to comply with, and issue legal notifications and such. So we went through a rationalization drive and we reduced about 200 odd schemes, which had a very smaller footprint in terms of number of people, in terms of the budget and so on. Now we have 300 schemes which can still go down by another 50 or so. So we'll have the larger schemes such as PM Kisan, Narega, PDS, Ujjwala, and so on. So keeping the larger schemes and seeing their disbursement properly is the first lesson that we've learned in all these years. If you see, all this data is available on our website, dbtbharat.gov.in. The disbursements have been increasing over time. And what we're showing is not the allocation. Allocation has more or less remained the same. The total subsidy budget on various welfare, if you remove fuel, the traditional subsidies, food and fuel and fertilizer, then the welfare payments, which are a little hard to quantify and to understand, it's in the tune of about 4 to 4.5% of GDP, if you take state government expenditure as well. Now, as I mentioned, the research scheme and the central sector schemes, the big difference is where you park the money, where does the budgetary utilization powers lie. So in our experience, when money is with the central government and the execution is with the central government, it's fast, it's quicker, because there are fewer agencies involved. When the money is of the central government, implemented through either states or through intermediaries, there is another step involved. And in that, there are some delays. We've tried to overcome those as well. But it's the third category, the centrally sponsored schemes, wherein the money is part or given constitutionally to the state governments. And when that has to be spent, of course, states all have their own differences, their own methods and modes of making these expenditures. So we've tried to get this all on a single platform and all in a single definition with turnaround times, that money should be spent in X number of days and so on. But states are completely empowered to bring in their judgment, to bring in their review into the entitlements, into what they want to spend on. The fungibility questions also sometimes come into play. So these are some complications that we work with. Now, the question that you asked about how successful has this been, I would say for the central government expenditure, for the central government component, we are almost at about 80 to 90%, I would say, where the welfare payments have been digitized, are reaching the beneficiaries in the intended manner. So the number here is about 310 plus schemes. It's 312 to be precise. Now in the state governments, we've monitored and tried to capture all DBT schemes in state government, and it's at about 1,800. So 1,800 schemes are being implemented at the state level, These are over and above the CS and the CSS schemes. So there are other works in play wherein states are developing their own platforms, and it's a very different approach than what is being applied in the central government. And hopefully, with time to come, with better targeting, with improved technological platforms, we'll be able to measure accurately what should be the entitlement of an individual, of a household, and ensure that the right subsidies reach the right people. And there's also an element of fungibility involved. So in case that somebody maybe wants a scholarship money over and above, or in lieu of their cooking gas subsidy, they can switch. So they can probably choose what they're looking for.
Very valid points. Kind of exchange of subsidy. I think best wishes on that note, Sharma sir, and looking forward to have that. I also have here Mr. Pawan Kumar Singh, and I would like to take here Indian Post's perspective. Mr. Singh, whenever any DBT or any kind of transmission that the government has to do, the Indian Post is the integral part. And I have also seen a great collaboration between the Indian Post and IPPB, because earlier even PPF installment, if you have to make, you have to go to the post office, which is now done by the IPPB. So considering the government initiatives and considering now, the government focus that Indian Post has been driving, my simple question to you, sir, is what next? Because a lot of things have been already been done at IPPB and Indian Post. What next now that we can see from Indian Post?
So what I'll do, I'll basically take you back a few years back, and then we'll take your question and move forward, where we intend to move. So basically, the post office has been serving the people through almost 1.6 lakh post offices spread across length and breadth of the country. And this post office savings scheme has been with the department since the year 1882. And we have been serving close to more than 50 crore customers through the scheme. We basically launched core banking system maybe in the year 2014, and in this year's budget you have seen Honorable Finance Minister has indicated that all the 100% of the post offices will be brought on core banking platform, and the interoperable solutions will be available to the post office accounts customers as well. So this is the development as far as post office schemes are concerned. Coming back to India Post Payments Bank, so the bank came up in the year 2018, and what it has done, it has taken the banking to the doorstep. So the bank is completely paperless. There is no paperwork involved in the bank as far as customer services are concerned. The bank takes full support from the UIDAI and all the Aadhaar-based solutions. The bank has strictly improved its financials, and as during the times also, you must have noticed how the postman and the Gramin Dak Seva, they reached out to the even the containment zones and provided the support to the citizens. So basic idea is to amalgamate the two processes. Right now, India Post Payments Bank is a regulated entity under Reserve Bank of India. Post Office operates post office savings schemes as an agency function of Ministry of Finance. So the operations are completely paperless, whereas the post office schemes today are, as far as customers are concerned, all paperwork are involved. So we are heading in a direction wherein even the post office schemes will become paperless. The customers will not be required to fill up the forms which they are required to do right now. They will not be required to submit the physical KYC documents at the post office counters. The customers will be in a position to do the post office savings scheme transactions sitting at home in his office 24/7. This is the intent we have. Yes, you rightly indicated that as far as remitting the subscription for PPF scheme or Sukanya or recurring deposit scheme, even through India Post Payments Bank account, the money can be remitted. Why so? Because as per RBI regulation, the payments bank ceiling is savings account ceiling is 2 lakh rupees. So if a customer has more than 2 lakh rupees, so he has natural linkage with the post office savings account. So that linkage between India Post Payments Bank account and IPPB account already exists. So we are going forward, we are strengthening this linkage, and we are ensuring that all the interoperable services, whether it is Aadhaar-enabled payment, whether it is UPI payment, all these things are available to post office customers also in times to come. And the post office customers also get the same quality of service which IPPB customers are getting today, and IPPB services are comparable with any banking system within the country. Apart from the banking services which is being provided by India Post Payments Bank, since it's a payment bank, it can have lot of third-party services under its fold. So it has already started providing the insurance services, both life, non-life, insurance, general insurance, even the credit facilities also in association with various partners. So in all, the bank is providing close to 35 services under through devices, and it's a very unique model. It's not available anywhere in the banking system. So what has happened? So the bank is accessible from 1.36 lakh post offices, post office counters. It is also available through almost 2 lakh postmen and Gramin Dak Sevaks. So what has happened? We have a system wherein the post office is in a position to provide banking services through almost 3.5 lakh outlets, either through the counter services or through the micro ATM carrying postmen and Gramin Dak Sevaks. So basically, and since 90% of our outlets, post offices are located in the rural areas, the focus of the bank is naturally towards the rural belt, and in 3 years' time, bank has been able to open more than 5 crore accounts. They have been able to do more than 7 crore Aadhaar-enabled payment system transaction. In a short period of time, they have increased their daily transaction count to now they are clocking around 2.5 million transactions a day. So steadily the transaction count is increasing. And as you understand, the payments bank, the more the transaction, more the income. So basically the transaction count is also improving day by day, and bank is moving in a direction wherein it is going to benefit not only the customers at large, but the entire banking system in one go. And we are in touch with some of the major banks around. Recently, our secretary, myself, and Chief Executive Officer India Post Payments Bank met with Mr. Khara in his office in Mumbai also to take forward our collaboration to a higher level. We have association with Common Service Center. This is another aspect which Dr. Tyagi is fully aware. So 1.1 lakh post offices today are providing Common Service Center services. So basically, post office today is becoming a one-stop shop for all the citizen services, all the G2C services, wherein both the financial as well as non-financial services are available to the customers.
Sure, Mr. Singh. Thank you so much. So, Khara sir, let me come back to you. And as Mr. Singh said, that post office has become a one-stop shop. For SBI also, SBI has become a one-stop shop, and it's everywhere. It's not just the banking products, but insurance and wealth management and so much things. My question is in two parts, sir. As we understand that globally, large financial institutions make lots of money by transferring payments, but here the UPI story is absolutely free. Nobody is making money out of UPI, significantly. So my question to you, sir, here is: by any chance, do you think that SBI or other banks will add weight on their profit by increasing the number of digital payments? That is one. And second is that SBI, what next in digital payments? Because your now government is coming with lot of banks and transferring their DBT and so many things and utilizing and leveraging banks to transfer the funds?
Well, when it comes to digital payments, that is something which gives an insight into the customer behavior in terms of what a customer is spending his money for. And from there lies the whole lot of opportunities. If at all we can mine it well, we can actually figure out that where else the banks can chip in and how best banks can create value for their customers. For instance, when it comes to our app, we have almost dispensed about the pre-approved personal loans which we are doing with the help of which is almost few clicks, and we have been in a position to do a huge amount, about 18,000 worth of business in the current financial year, only by leveraging So when it comes to our ability of offering the value to the customer, it's actually a frictionless transaction for the customer. In terms of customer fulfillment, it's a huge opportunity. And we are not only doing it, I think we have moved much ahead of the transactions in terms of the payment transactions. We are leveraging this platform for many more things. We are actually using it for sourcing agri-gold loans. We are using it for doing KCC reviews. We are actually using it for when it comes to pre-approved two-wheeler loan. We are using it for, and multiple more uses which we have put this platform to. Apart from that, we are also using it for the as a financial superstore, which means that when it comes to offering the products and services of our associate companies, subsidiary companies, they are the manufacturers of life insurance policy. They are the manufacturer of mutual fund product. They are providing card services. We are leveraging it, this particular platform for all those purposes as well. So I think the platform has proved to be pretty useful. Almost about we are having almost about 1 crore worth of login comes every day in this platform, and our customer base which have got themselves registered for this particular platform are about 4.7 crore. So that is the kind of a number, and we feel that it is actually increasing almost on a daily basis. 30,000 odd savings bank accounts are getting opened on a daily basis. It's a seamless eKYC based process, end-to-end digital process. So that way, this platform is becoming a bank by itself in many respects. I think it is comparable to many of the banks in the country also. So I think it's a bank-within bank. And apart from that, there is a functionality which is essentially from the point of view of online marketplace. So we are having tie-up with the merchants, and the merchant can showcase their wares on this platform, and all our visitors who are coming on this platform, they are in a position to visit those merchant sites and can really make their decision for buying. So that's what it is. I think beyond transactions, beyond payment transactions, it has proved to be a very useful platform. And we are still working out in terms of how can we enlarge its scope. We have started using it for the SME business also. When it comes to opening of LCs, almost about 60% LCs are getting, more than 66% LCs are getting opened with the help of And we have has gone global. It has already made available at 9 locations across the geography, and it is paying off its value. Apart from that, we also feel that going forward, we can even enhance its utility, and the customer experience can even go better.
Very well said, sir, and glad to know that Yono has gone global. Very, very valid points, and noted that. Let me bring here, Dr. Garg back into the conversation. Dr. Garg, can you please put on your camera before I let you go? Let me shoot one question to you. since you're talking about payment transformation and all that, my question to you, sir, is how is UIDI building contactless payment for the government services going ahead, and how are you strengthening the whole authentication process further? I remember last time you said that smartphone will become the whole and soul of the digital payments going ahead. So how the government is actually making thinking about it, and how the payments will become effortless in future going ahead, sir, from UIDI's perspective.
There are two activities which are anyway ongoing to make it contactless. You have the OTP service, which comes on the phone, which is in widespread use. And we have recently introduced face authentication in certain services, and we are now expanding it to the banking and the financial services. So face authentication will also help to make it contactless and so much more seamless. Going forward, as I said, the mobile phone, the smartphone is going to be the universal authenticator. That requires some more work before we reach that point. But face authentication would enable us and help us in moving to that. As also, we are looking at what kind of security, cyber security we need to introduce, so that any changes that may have been done in the smartphone or on the phones, we are able to detect those. So that will take some time, along with working with the cyber security experts. The second part, which you mentioned, was on the on other cybersecurity features. I mentioned some of them initially. One was the liveness check, because we had been getting some kind of information that people are using some kind of gummy fingers and trying to with connivance of the operator, and that's why we have this assisted mode. So we have introduced a liveness check which takes care of that. We constantly upgrade our cybersecurity, look at what is globally happening, and that is how we are relooking at our registered devices that we have. For example, the micro ATMs that are used, on what kind of additional hardware or software can be brought in. So this is a continuous process, and cybersecurity, preventing frauds, is something which we realize is extremely important in the financial sector, and that is somewhere where we keep always abreast on what's going on.
Thank you for adding those points, Dr. Garg. Let me bring you back, Dr. Tyagi here. You mentioned earlier about social welfare schemes and public utility services. Sir, my question to you now is, going ahead, what is in the pipeline of CSC to make financial inclusion services accessible in all the villages, facilitating ease of access to government services and making the citizens and the government digitally empowered?
See, as I mentioned initially, the program was to set up at least one CSC in every panchayat. There are 250,000 of these panchayats, and that is almost complete. Now the government's mandate is to make this the access point in every village. So by 31st March, hopefully we should be able to cover more than 600,000 villages having one single access point. And many of these access points will be operated by the self-help group women. These women who has a smartphone, and the first activity as a CSC when she starts doing it will be the digital financial transaction. Because as long as she has a mobile phone and she has an Aadhaar-enabled payment system, she will be able to try and do that part of the work. It's very, as I mentioned initially, it's very empowering, also empowering women, and issues of credibility, issues of the confidence you build in the community to access these services through assisted format will also get enhanced as long as there's a women involved and she is also from the same village. So we are almost done about 50,000 self-help women. Our objective is to cover about 1 lakh self-help women across the country, make them that part of the work and enable them to deliver CSC service. They will start with financial inclusion and slowly they will do the other welfare measures. Many of the other government of India programs like e-Shram registration, about 26 crore of the e-Shram registration has been done, out of which substantial number, more than about 15 crore is done through common service center. See, their ability to mobilize community is very high. And since they operate, there are no timings, they work in the night, they work in the early morning, as per the convenience of the customer. That is a big advantage. We do deliver services to post offices, but post office will not be operative on Sundays or after 5 o'clock or before 10 o'clock. The CSC being an enterprise and entrepreneurship model actually addresses the concerns of people as per their convenience. So if a farmer wants to go to a field and want to, before go to the field, he want to access some service, he is available. Or if he after come back to the field, there's something available to him to withdraw the money. As I said, this is what we are doing it. And central government, all the ministries, almost all the services, whether it's related to farmers, PM Kisan Samman Nidhi, or Kisan Credit Card, or the PM Swanidhi schemes, they are all available through common service centers to the citizen. What they do is, they not only create an access, they also mobilize, create advocacy for the program. See, the people want to be very confident of what they're doing. You just can't try and say this scheme is there. So what this community guys, we call them, invite them, mobilize them, create an atmosphere of saying, understanding and appreciating. And as a group, then they try and participate in those programs. We are seeing a huge participation. We are now, of course, doing one with the culture ministry of doing culture survey for every village. It's called Mera Gaon Meri Dharohar. That project is being done. So all the cultural features of that village are being captured, whether the food habits, cloth habits, living, or there are ornaments of that nature, or there are music systems which are peculiar to that village, or there are buildings or architecture which are available in that village, which is also being captured, and we are now doing it. We already started the program. We so far covered 35,000 villages recently done. It's also technology driven. The technology has helped us quite a lot in trying and doing the large scale within defined time frame. And the CSC center being there, it becomes easy for us to try and operate. So most of the programs of Government of India, if the Government of India want to access the large canvas of the rural India, with take off button, the CSCs are available for them to try and access and deliver service.
Thank you, Dr. Tyagi, for that note. Prasad sir, now my question to you is, again, Khara sir, I asked the same question to him of profitability, and he said that pre-approved loans and everything has been done on the data, on the digital payment transactions. How do you look at it? And considering the government is going really high in terms of the government payments transformation on the digital side, do you find that proportion profitable in near future? If not, how do you actually look at that as a business proportion?
I mean, like there's a saying which says that there is a lot of wealth at the bottom of the pyramid. So I think even when it came to Jandan accounts, I mean, initially there was a lot of skepticism that, I mean, opening these accounts involves a great deal of cost to the bank. And ultimately, I mean, it will not turn out to be very profitable for the banks for opening these accounts. But gradually, we have seen in case of Jandan accounts also that, I mean, we have seen a number of zero balance accounts have come down. The average balance in these accounts have gone up. And the government has come up with various schemes under which, I mean, which can be extended to the Jandan account holders. And as these people build up their credit history, since we have their accounts with us, and I think it forms the basis for extending small loans to these customers. So as it has also been said earlier, what happens is that earlier when we wanted to finance a customer, we never had an access to his track record, a track record of his credit history, of his payments and his payment behavior and so on. So it became very difficult to extend credit to a certain section of borrowers, a certain section of customers who were not in the formal sector. So now what's happening is that, I mean, with this DBT, which is going into the accounts, which is much better targeted, and with the access to their payment history and their payment habits, and with a whole lot of data which is available to us, I think, and now nowadays, because of fintechs, we have access to a whole lot of databases, which we didn't have earlier. I think this has improved the quality of underwriting. So going forward, I would say that this would provide a base for the banks to extend their credit. And I think the credit costs will also come down because we have access to data which will help us in assessing a customer better. So I think it is whether you look at it in terms of CASA balances, whether you look at it in terms of, better credit underwriting for the banks. Whether you look at the opportunity in terms of cross-sell to these customers in terms of insurance, mutual fund, credit cards, and so on. I feel that there is, the banks can utilize this data to expand their business and expand their business in a very profitable way. I think that is where the proposition lies, in the sense that see, these are all providing you access to the data. There was also some talk about cash flow based lending earlier. So what is happening is that with all these, with your GST and with access to the payment history and all that, there is a greater formalization of the economy. And of course, there is always the major advantage to the banks, that as the number of digital transactions increase, the cost of transaction for the bank also comes down. So it is actually, the difference between a physical transaction and an ATM transaction and a digital transaction, there is a huge difference between all these transactions. So, a digital transaction maybe it will not even come to 1/10 of the amount which we spend on a physical transaction. So this is again a huge cost saving for the banks in terms of the transaction cost. And it also enables us to access customers whom we would not have otherwise accessed earlier because it was only possible to the physical branch network. So nowadays, going digital would mean that we need not have a physical presence everywhere. So I think that would also cut down the cost for the banks, because a day will come when, in fact, if you look at it, I have not visited my bank branch in the last 10 years. I have not gone there. So there was no need for me. So I think that is going to be the reality going forward. A customer would not going forward be looking for a physical bank branch. So what happens is that we'll have a greater access to, we have access to a bigger customer base, a more profitable, the banks would definitely be look at doing business more profitably, selling more products to the customer, do better credit underwriting, and doing transactions at a much lower cost. So I think going forward, this is going to revolutionize banking in terms of improving the profitability of the banks.
Sure, Prasad sir, thank you for that note. Sharma sir, let me come back to you. I will try my best to quickly, wrap up, gentlemen. Thank you so much for your time, but let me take just two important questions. So, Sharma sir, my question to you now is this: that what are the major challenges do you face in DBT? Because you will find a lot of issues with the villagers, with the farmers, those who actually need the DBT, and they do not have the right technology. They may not also have a. I know that under PMJDY, a lot of people have opened the bank accounts and all, but there will be a lot of people who are under BPL may not have a bank account. You may still find then issues with the panchayat and the gram sevak and all those, whole ecosystem. So how do you actually address these kind of issues that you face? So question is in two parts. Sir, first, tell us the challenges that you face and how are you trying to resolve that?
Macro level, where we sit, beneficiaries are at our villages mostly. Where we sit, we try to take a very holistic and a macro level picture. And broadly, there are 2-3 kinds of problems that we face. The most basic ones are eligibility, entitlement, and how do we get them operationalized. Who's the right beneficiary? What is the entitlement for him or her, which is correct to the requirements? This is the whole and soul of the entire DBT framework. Whether we are able to identify what the person needs and whether this is the genuine person. The genuineness is we have a tool for it, Aadhaar, where the identity is ascertained and recorded. Now, this is the starting point when we make the beneficiary databases for various schemes. In the execution of these programs, you mentioned 1 or 2, Kisan or Jan Dhan Yojana or the PDS. Every scheme has its own set of issues. There are issues across states. There are issues across within the state also. Intra-state, there are district level variations. There are technological problems leading from Aadhaar authentication to banking transaction failures to problems in withdrawals, where either AEPS does not work or the APP has not worked. So each and every problem, now what has happened in all these years is they have been standardized. For example, the bank return codes a couple of years back were all did not have a common meaning, did not have a common sort of code. But now, if you look at a problem under which a bank is returning that payment response file, you can know that this says that the credit amount in the or the credit limit in the destination bank account was reached. So you can go back to the sending department and say that contact the department and so on. So the policies for mitigating these measures, etc., are indeed centralized. We're trying to push them. That's the only way. If the people are empowered in the sense of having the right information, having the right tools, to having the right agency, wherein they can take up any problem that they face with the authorities. They can escalate it if it's not being met in a time-bound manner. So that kind of dialogue and interface we need at the ground level, because we've got the academic or the theoretical framework. This has to be more operationalized at the ground level, and this will take time, and this will also take the involvement of all stakeholders. It's not a standalone solution that only either the central government or even a state government can push. NGOs, banks, CSCs, I mean, there are assisted models that CSC follows. There are assisted models that a bank or a BC follows. Everybody has to come together. So it's making, it's a very noble cause to make a subsidy reach a poor beneficiary. I mean, it's a very noble cause. Everybody kind of has to come together in engaging and in educating that particular person that these are what is available to him or her, and this is what they can do in case it is not met.
Thank you, Mr. Sharma. Mr. Singh, my important question to you is now, how do you see the whole payment transformation going ahead? A lot has been happened, a lot may happen, but what are the 2, 3 areas that you see from India post, going ahead specifically in the payment space now?
One of the key areas where the bank is focusing is bringing more and more people on its platform, because its core strength is serving the customer at the doorstep in the rural areas, in the hinterland, in the remote locations. So when the bank was formed, the Jan-Dhan account figures had already crossed 40 crore. But even after that, bank has been able to open more than 5 crore accounts. Almost 50% of these accounts are women accounts. And these accounts have been opened at the doorstep. So this model, assisted model, because even today, majority, more than 50% phones being used, mobile phones being used by Indians are feature phones. So there, the postman and Gramin Dak Sevak carrying the micro ATM devices, the smartphone, along with the biometric device, and giving the banking services, insurance services, and other government and citizen-centric services at the doorstep. So basically, the old days concept of delivering the letters, paying the money orders has moved to this area, and the bank is marching ahead and ensuring not only it becomes profitable, but in turn it helps the society at large in the hinterland, and the problems that has been addressed related to DBT and other credit related issues, with all the information coming in through the fintech in the banking domain. So all these delivery, the bank can become the delivery tool of credit and collection of the credit money back from the customers. The bank can be instrumental in these areas, and the bank is actually working to reach that level.
I'm done with my specific questions here, gentlemen. But let me, before I wrap up, I want 30 seconds from each one of you. And as we are discussing the era of digital money, just 30 seconds, maybe your reaction in terms of future. And I want all of you to talk about it. I will start with you, Mr. Khara. Uh, how do you see the future of payments in India? How do you see India's future of payment?
I think it is digital is going to be default option going forward. So that way the payment system are going to really evolve.
Prasad, sir?
I think we are all hearing about CBDC, central bank digital currency. I think it is going to add a new dimension to the digital payments. Maybe I think the RBI is thinking in terms of a wholesale CBDC rather than a retail CBDC. So I think going forward, I think it will play a very important role in cross-border settlements, ensure cross-border settlements at a much faster pace and also seamlessly for the customers.
Sure. Tyagi, sir?
The LIC IPO will redefine everything. I do believe that with 30 crore policy holders, demat account and PAN card being done, they will start looking at financial including differently. The demat opening account will really transform the way we have been looking at the financial business.
Very valid points. In fact, there is a lot of fear about LIC in the market. Thank you so much, sir. Sharma, sir?
Future of payments is digital. More and more digital. We need to get security in place, especially endpoint security around mobiles, around biometric, and of course the strengthening the entire ecosystem and education. Those are the hard or the non fashionable areas that we have not kind of worked on, but it's only about 30 to 40% penetration we've reached in terms of transaction, in terms of the population. This has to increase.
Thank you. Singh, sir?
So what I see is the brick and mortar structure going away and getting replaced with all the digital platforms going forward.
Thank you, gentlemen. Thank you, Khara, sir. Thank you, Prasad, sir. Thank you, Tyagi, sir. Thank you, Singh, sir. Thank you, Sharma, sir. And thank you, Mr. Kaushik and Dr. Garg, for sharing remarkable insights on the era of digital money and how the technology is actually transforming the whole ecosystem, specifically in the payment space, and adding a lot of value in terms of telling us how the future of India looks like, specifically in the payment space. Thank you, gentlemen, for sharing your remarkable views here. Thank you so much.
Thank you, everyone, for such an engaging and informative discussion out there. Thank you very much. Now we'll move to the next session. But before that, let's take a short break.